Federal Reserve Chair. Jerome Powell highlighted the ongoing weakness in the U.S. labor market amid the continuing federal government shutdown, which has delayed the release of key economic data, including the September jobs report and updated inflation figures. Speaking at the National Association of Business Economists, NAB, Powell noted that payroll gains have slowed sharply, partly due to declining labor force growth driven by lower immigration and reduced labor participation. Despite low unemployment through August, he indicated that downside risks to employment have increased as hiring slows, layoffs rise, and firms struggle to fill positions. Powell described the labor market as showing both supply and demand softening, unusual given historically low unemployment. Inflation remains above the Fed's 2% target, hovering near 3%, largely due to tariffs rather than broad economic pressures. He stressed the Fed's policy dilemma. Raising rates too aggressively could worsen the labor market, while cutting rates risks letting inflation persist. The Fed's September rate cut, the first of the year, reflects efforts to balance these competing risks. Powell emphasized that labor market softness, combined with trade-driven inflation, requires careful calibration of monetary policy. Analysts suggest the Fed may continue a cautious approach, potentially implementing further rate cuts if labor market conditions weaken further, while closely monitoring inflationary pressures from tariffs and other uncertainties.